Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money potentially on the internet. Loaded up for discussion today. We have Michael Saylor on the Forbes cover as the Bitcoin alchemist. Legendary. Be diving into what that means in a little bit. We've got the ECB president rejecting Bitcoin for the Eurozone reserves, while the Czech central bank is considering it. I'll be sharing just a little bit of a breakdown there. And then we've got Brad talking through the $730 billion asset manager Apollo launching tokenized private credit fund. Interested to hear about that. We've also got the latest on price action on crypto and NFTs, plus a discussion on general market sentiment. So stay tuned for that. Today, I've got Legendary in the co-host seat. I've got Brad in the co-host seat, and I'm delighted to welcome to the stage for the first time David from Silvermine Capital. He's the investment part at Silvermine Capital, who is our strategic investment venture capital partner for the next few months. We're delighted to have you with us, David. How are you doing? How are you feeling?
I'm great. Cheers, B-Check. Absolute pleasure to be here with you guys. Super excited about the partnership. I think the convergence of media outlets with investing in crypto has so many synergies. So excited to be working with you guys.
Absolutely. I think I'm really, really excited as well. When I first kind of cooked this up in my brain, I thought you like the show is going to benefit so much because just top 10 knowledge for the people who don't know. David is former Deloitte, former Goldman, all kinds of knowledge. Talked me through a lot of my investing thinking in London when we first met. And I think in general, it's going to give us some additional firepower as the modern market, as we seek to expand our presence as a media and investing team as well. So really delighted to have you. I think it'll be an asset to the audience. And shout out to Funky, who is with us as usual, who is the person who connected us in the first instance. Always great there. Brad, it's Friday. It's the 31st of January. How are you doing? How are you feeling?
Hey, buddy. Yeah, getting used to my new setup. People who are watching the video, you can see my camera's on a new angle. Kind of put the final touches on my office. So had that post go off. I spent a lot of time doing product lists for people that kept asking me like what the various things were. Did a little bit of that. And then obviously Kaido just finished up. So dealing with some of the fallout of that, we came in number 2 behind 0G, which we'll talk about a little bit later. Yeah, so it's been a busy the last few days.
I like it. Are you still, when you're preparing this list of all of your office equipment, are you still open to the idea of the Web3 QVC for our TikTok channel? That's still something which I think is, one of our areas for expansion.
The demand is higher than I thought.
Investing with Silvermine, but also we want to do some TikTok shopping.
Yeah, the demand is higher than I thought. I put out that post, it got like 30K views and like 1,000 people asking me for various things that I did and why. And I already did that with like my travel shit. Like remember I did my little bag of like, this is the thing I packed. This is why I packed it. This is why it's all cute and organized and whatever. People seem to like that. There's a lot more of that here. That's like TikTok content or like Instagram content. There's some acceptance of that here apparently. So yeah, it's we might have to lean into it.
I like it. I'm not opposed to that. I think it's going great. Legendary, how about you? Before we get into the main stuff, before we get to the headlines, price action, how are you doing?
Pretty good. My QVC angle would definitely be carry-on luggages. That's the one I explored on the timeline before. I had this
Why
post.
Do you like luggage so much? I think you like luggage a lot, don't you?
Well, I've been on more than 30 flights last year, so there is a bit of a science, and there is a very strong opinion that I hold that Remova is just not top of the game. I like Briggs & Riley more coming out of the UK, I like Horizon Studios out of Germany. And I had this post in review, which did pretty well. But other than that, I'm also doing quite well. I'm a bit tired. Trenches was a long waiting game last night. I think I got to bed at around like 3:30 a.m. and woke up at 7. But there's also a long weekend ahead, so no rest just yet to be had.
No rest at all. David, what's your take on the luggage situation? You're doing a lot of travel. Do you have any? We don't have any reference at the moment.
I only use North Face only. Okay, so I get the duffel for the handheld, and then I've got the big wheelie one as well. They last years. Can't go wrong.
If you have wheels, if you guys have wheels, you're failing at life. That's my firm position.
Wow.
I lived 3 months out of a backpack. You don't need those wheels, and it's so much more convenient. You don't have to worry about check shit. You don't have to worry about like, oh, weird last minute flight thing happened. I got to send this stuff down the hall and hope that like flight change. Whoops, I got to go over here. Hopefully my bag makes it. You just don't let it leave you, and it's all in a backpack. You can make it work, I promise.
I mean, Brett is right. When I was in consulting at EY, our managing partner used to tell us the more important the consultant, the smaller the luggage. You had the juniors carrying all the bit, and he had like little bag that he was holding. That was his philosophy.
Okay, we are going to get into the price action and all the main stuff in a second, but final point on luggage, because I also feel strongly about this in one way. I don't mind wheels, but the only kind of bag that doesn't work for me is the bag that you hold, like a duffel bag, right? Like the one that you hold by your side. Like if you're going to have a bag, you put it on your back, because then you're taking all the weight and then it's easy to hold, right? Who would hold the bags by the side? Like, does it look better? But it's so uncomfortable. Am I the only person there?
The weekender. That's what you're referring to, like a weekender?
The gym bag / the weekender.
Yeah.
What's with that? Why not just put it on your bag, you know? Look.
Yeah, I tried it once. It was okay. I'm 100% backpack for the last 3 years. I've done two 90-day trips out of a backpack. You can do it.
Damn. Okay, well, I think we're kind of achieving some consensus there for when the TikTok shopping channel goes live. But let's get into the live price action instead. Now that is probably why you're here for, not necessarily for bag recommendations. Let's start with the majors. We've got Bitcoin pretty much flat at 104K. We've got ETH up 3%, but it's still at 3.3K. That's what ETH does. Solana is down 1% at $238. Getting into the meme coin side of things, we have Doge flat at around 33 cents. Pepe is up 3%. Trump's down another 4% to 26. Bonk is flat. SPX is up 4%. Murad's coin. Pengu down another 6%. Obviously, there's a bit of news there, which we'll touch in the Web3 Roundup. People have got 5 days left to claim their Pengu. They've brought forward the claim deadline there. So if you are still waiting to claim for whatever reason, you do not have as much time as you might have thought. AI16Z down 10%. MOG is up 10%. Still down a quarter, though, over the last 7 days. Looking for some other headline stuff. AIXBT down another 8%, down 30% in the last 7 days. So AI is taking a bit of a hammering in the last month and last week or so. That's the main stuff from the meme coin side of things. Getting into the headlines, Michael Saylor is on the Forbes cover as they describe him as the Bitcoin alchemist. Legendary is going to break down a little bit what's going on there, maybe make some comparisons to some other famous crypto participants who have been on the Forbes cover as well. Also, the ECB president has rejected Bitcoin for the Eurozone reserves while the Czech central bank considers it. We obviously reported on the Czech central bank considering it the other day, but the ECB in general still seem to be very, very diametrically opposed to Bitcoin being any kind of component of the reserve currency. I'll just kind of update people on that in a little bit too. And then finally, $730 billion asset management manager Apollo launches a tokenized private credit fund, which is pretty interesting. Brad is going to be breaking that down a little bit later. It's available on Aptos, Avalanche, Ethereum, Inc., Polygon, and Solana. So that is that. Legendary. Before we get into the main stuff, what's going on the NFT side?
NFT market is pretty red today with different degrees of drawdowns. We have Bored Apes down 3%, 12.6 ETH floor for them. We have Pudgies down way more. They are down 8.5%, 11.18 ETH floor. Just a couple of days ago, they had recovered to a 12 ETH floor, but were not able to hold that and have dumped even further. Miladies being the only collection that's green today, up 1.6%, 5 ETH floor for them. Doodles correcting down another 2%, 4.4. 5 ETH floor for them, and Azuki's yet another 6% down to 3.4 ETH floor. So not looking good on the JPEG side of things.
Not looking good on the JPEG side of things. Okay, that's not great. Getting into the Web3 roundup to get you up to with everything else that's happening. A lot of corporate stuff happening at the moment, I'm finding. Bitwise just received approval from the SEC for their Bitcoin and ETH ETF. The XRP ETF could be on its way as Grayscale has applied to convert its XRP trust into an ETF. SBS parents are exploring the potential of a Trump pardon for their son, not necessarily a corporate bit of news, but not one which crypto Twitter responded to very well. On the more degenerate side of things, Elon Musk's father hopes to raise $150 to $200 million from Musket meme coin. This seemed to have been live for quite some time, pumped aggressively on a Forbes article yesterday. This is not made up. This is literally published in Forbes. It pumped really, really hard yesterday, maybe lasted not very long and just dumped aggressively straight after. So that is that. Circle announced open source project Recibo, which enables on-chain payment transactions to include encrypted messages and data. I think that's pretty interesting. Bitcoin meme coin launchpad Odin launches. Kind of curious to see what happens there. I don't think Bitcoin is particularly well designed for that kind of on-chain activity, but let's see. Wallets linked to recently pardoned Ross Ulbricht appeared to lose millions of dollars by incorrectly providing liquidity on Radium. That was according to Arkham Intelligence. And as I mentioned already, Pudgy Penguins announced Pengu claim cut short. You now have 5 days left to claim your Pengu if you haven't already. That is that. That's the Web3 Roundup to get you to with everything else. Going round the table here before we get into the main headlines and the bigger discussions today, just to get a sense of, from the Web3 Roundup, not including the headlines or just anything else on the market at the moment, what's catching your attention? Legendary, starting with you.
Yeah, the Musket story is a bit of a hilarious one. If you look at the chart, let me bring it up here. There we go. Basically flatlining at 10 mil for a while. Article comes out, chart goes up to 220 mil, went even higher on a couple of weeks. I think it was up to 400 mil when I saw it yesterday. Then immediately went into a mass sell-off and is now basically...
Did you want to be sharing this, Legendary? You're not sharing it at the moment.
I'm sorry. There we go. Flatlining chart, article comes up. There we go. Shoots up to like 200 mil, wicks even filled at 400 mil, and then overnight immediately draws down essentially to the point where it was before that article came out. And the article was in Crypto Forbes, it was on Yahoo Finance, was a very lengthy one. Not only Elon's father talking to his idea about Musket, but also talking that apparently allegedly his relationship with his son got better. So it was pretty weird because of a very, very lengthy article. And again, immediate wake up and massive sell-off. So yeah, this is the way the trenches are operating. We've seen another launch yesterday, Strike, which came out of the Kempai Pandas ecosystem. A token opened at 500 mil and also immediately went into a massive sell-off as well. So it does seem that the trenches are very much primed to pump things up, sell them within the same day. The jelly chart, which we talked about on the show, looks very, very similarly. Again, Strike
has been down only since it's huge.
He is at $4.
Yeah.
Strike opened at 500. I'm looking at another chart. It's trading at 117 right now. So you have very aggressive.
Of the Free Earth, his meme coins down only.
Yes, and 80-90% drawdowns basically on the same day.
Internet capital markets are very liquid, aren't they? You can get in and then you can get out pretty fast. Brad, did you have any further thoughts there or anything else catching your attention at the moment? Then coming to you, David.
No, I mean, that's literally the value prop of a lot of this space. It's just like, yeah, you're 2 button clicks away from buying the literal president of America's meme coin into like eating into jelly, which is the flavor of the weekend, and then taking that over and putting into this. We're going to talk about tokenized securities, right? Like the velocity in which you can transition from basically anything in this space is both the benefit and like a little bit of the curse, right? Like you get a lot of fleeting capital that way. Outside of that, it was just I got go ahead if you want.
Sorry, just one more point on that, because we talked about that quote unquote deflationary effect that has on that the bonding and the pump fund launches have on Solana. We said on the one hand, there's the liquidity pools with basically dead tokens that nobody will exit, and this is where Solana gets quote unquote burnt, gets lost. And then Alain, the pump fund dev, also posted this: when a coin graduates pump fund, the liquidity pool is burned. Liquidity pools have a minimum price, meaning that thousands of dollars of SOL are taken from circulation every time a coin bonds. And Bolsoverse in the comments came up with a bit of napkin math on that. 5 million tokens launched on Pump Fun, 95,000 tokens bonded. Let's say 7K approximately worth of Solana stays in pool if everyone sold. That means 665 M of Sol burned forever from this bonding process on top of everything else that we've been talking about.
Yeah, I mean, but that's exactly what we were talking about the other day, right? All of the Sol. I mean, people say that Sol is going to be inflationary, or that there's these unlocks coming. But if everyone's burning all the Sol in this bonding process, it might not be as bad as you think. That's interesting perspective. David, what about you? Any particular comments on the Web3 roundup, or any more general comments from an investing perspective at the moment? How you're seeing the market, and like what state you feel the market is in?
Yeah, I think one thing to touch on your summary there, and the stuff we're looking at closely, is obviously the ETF stuff, right? Like Grayscale going for the Ripple ETF. I think Bitwise yesterday got approval for a Bitcoin and ETH combined ETF, and Osprey Rec Shares literally the other week filed for that plethora of ETFs, right? Like Trump ETF, Bonk ETF. We work very closely with Osprey Rec Shares. They're an investor in our infrastructure business. And like speaking to them, the guardrails have just come off. Like the fear from these institutions to be able to file for these things is just complete 180 from where we were a month ago. And these things take a while, obviously, to get approved. But there is huge confidence in the market from these issuers that in the next 6 months, this whole landscape changes, right? And this, from an institutional perspective in the TradFi world, it's just a signal, right? It's like, okay, legitimacy, this sort of stuff. I've spent the last week out here in Miami at the Global Alts Week, which is like the biggest alternative investment asset conference, like in the TradFi side. And we can get into that later. It ties quite nicely into the securitized stuff. But these guys are coming, right? They have the confidence now. Like the meetings we're having here are not meetings I could have had a year ago, because you would have been the joke in the room. Now you're like the cool kid in the room, and everyone wants a piece of it. So it's just amazing to see that change in people from the TradFi world, and all these little things are just like slowly compounding and adding up and giving legitimacy to this industry that we previously didn't have. So just super exciting all around from our perspective.
That's fascinating. What you mentioned a couple of very specific ETFs there. I don't think we necessarily covered that on the show last week. Just double click on that and tell us what those were.
I'd have to remember the complete list, but
it's probably the
Trump
blend.
one.
Trump ETF, Bonk ETF, Solana ETF.
These have all been filed for.
Yeah, correct. I can share the link with you. I'd have to find it, but yeah, I think that I might get this number wrong, and it's probably a lot more now, but a total of maybe like 37 crypto ETFs have been filed for since Trump got in. And I think we're going to start to see some real, and there's going to be interesting products, right? There's going to be, like, I think yesterday a Canadian ETF provider started filing for staking ETFs, right? Solana staking ETF and stuff like that. So these products aren't going to be as simple as just an ETF. You're going to start to see some really interesting financial products come. Yield is the name of the game, right, for TradFi guys. So anything with a yield attached, hence like MicroStrategy's new stock offering, right, with the dividend, the preferred share. So people are trying to adapt these products now to fit into TradFi models and stuff like that. So yeah, it's super interesting, and it's only just going to lead to more assets pouring into the space.
I love that he said the single thing that's always been the bull case for us with these ETFs. He said yield, yield, yield. Like that was always the thing that we were like, oh man, if Ethereum gets approved, yield. But now Solana really kicking off, and the yield is actually pretty high in Solana if you're staking, because of all the activity on Solana. Like that regulatory lead that Ethereum had, if like he said, the doors are off, everyone's filing. If that approval process is expedited, and Solana now steps in as the yield bearing thing on top of it being the monolithic thing, like things are getting a little shaky for Ethereum.
As if it wasn't already enough shaky, right? Like I think Ethereum's kind of been creaking a little bit under the weight of a variety of issues that we've been talking about, versus Sol, versus hype, versus the kind of the gold narrative for Bitcoin as well. So interesting. I think, David, you'll be awesome as the weeks go by to kind of keep us up to date on all of this stuff. I think you follow this stuff more closely than us. So really looking forward to those continued updates. So just guys, we're going to get into the main headlines as usual in just a little bit, but here we're going to get into our sponsored segment today, with our AI chain partners, Zero G. It's we're going to be doing some educational breakdowns here, as we do for all our other partners. Very excited to bring this new series to you. I'm going to go to Brad, the most technical of us, to deliver this.
Yeah, so I read over this. What we're going to do broadly is we're going to do a little education on the chain aspect of Zero G, which is interesting because it's unlike traditional monolithic chains. It's actually designed to be highly modular, which makes it a pretty ideal backbone for AI workflows that require like constant updating, right? So if you take a step back, the chain itself is structured is important because again, it's blown out into a bunch of components, which are like described as separate networks themselves. And it allows for each one of those components to adopt to be used in horizontally scaling chains. So like you have 4 components. There's the consensus network, which is for secure decentralized validation. You have data availability, which is for scalable. It's scalable and used. It's cost efficient data storage. That's something that we've referred to recently with like blobs and Celestia, stuff like that, right? Storage, which is for high performance AI ready infrastructure, and compute, which is for optimized execution for AI Web3 applications. Now, up to this point, the industry has been largely integrated in our approach. And now that is both like highly integrated when you talk about Solana and mostly integrated when you talk about, again, Ethereum has data availability, it has like storage, it has compute, but it's all in a singular network. So Ethereum and Cosmos, again, specifically, are the most modular of what we have. And it's comprised of a cluster of networks. Zero G is taking that a little further, and they're actually decomposing even within themselves so that each one of those things is an independent network, and it gives people the composability to be able to like interoperate with the singular thing that they want. So technologically, it's best to just think of it as like a combination of Celestia, Eigenlayer for restaking, Arweave for storage, and an AI inference market. That creates a single unified like AI native blockchain system. And just like as a final point for it broadly, it's just EVM compatible for people who believe in the network effects of the EVM. And that enables dApps that are already deployed to like Ethereum and L2s that are EVM L2s to integrate pretty seamlessly with it without needing to migrate entirely. And that's it.
Love it. Thanks so much, Brad. Always outstanding technical breakdowns from you, and thanks to Zero G for sponsoring that segment. We look forward to bringing these explainers to you on how Zero G's chain seeks to truly enable on-chain AI. So looking forward to delivering those as we go through the weeks. Getting into the main headlines now. The first one we're going to go to is Michael Saylor on Forbes, the king himself, on the Forbes cover as described as the Bitcoin alchemist. Legendary, you're going to break down this news. What are we thinking here? What's the perspective? What are your thoughts?
Yeah, starting to take a look at the Forbes cover first, as you said, the Bitcoin alchemist, but it
So
seems
zoomed
like,
in.
it seems like they couldn't decide whether they want to call him the Bitcoin alchemist, because on the right-hand side, it's a bit smaller. They also call him the volatility virtuoso. So they go for the double title here. And just for a bit of context, just to take a step back, obviously, Michael Saylor has been accumulating a BTC like there's no tomorrow, holding a stash of 470,000 Bitcoin via MicroStrategy. Also saw, as a result of the price action, his net worth, his personal one, increased from 2 bill to 9.4 bill. But then the reactions on the timeline were a bit more skeptical, a lot of talking going on whether this is a top signal, whether this means the bull market is over. Or a couple of posts, I'm going to bring them up real quick. Like this one, looking at a Bitcoin chart and looking at other prominent people like SPF, and basically the BTC top that we had last merry-go-round at 69K when he made the cover of Forbes, and now it is Michael Saylor's turn to be on the cover. Then also going a bit back more in history with Elizabeth Holmes, the infamous Theranos founder, who also made the cover. So there's been a bit of FUD around that, and a bit of, the question asked, is this the top? Obviously, Forbes puts a lot of people on their covers because it is a magazine and they need a person on their cover. And yeah, correlation is not causation in this case, but it does beg the question where we are in the cycle, and when we are in terms of basically mainstream media coverage of what is going on. And it seems like Forbes, and the Forbes cover specifically, seems to be a measure of that. But then again, I wouldn't, personal opinion, read too much into it. Yes, there is a systemic risk if the BTC price would plummet significantly, and that potentially at some point could be, a black swan event. But then again, that's not tied to Michael Saylor being on the cover of the Forbes, but more to where the BTC price is going in the future.
Interesting stuff. Great breakdown there, Legendary. David, maybe coming to you straight away here. We're talking about institutional appetite. I guess this goes into that institutional bucket. What are you thinking? Not just about Saylor being on the front cover, but I would be curious to hear your thoughts on that as well. But also just the general institutional demand that I guess Saylor has exclusively inspired, but is inspiring. I suspect he's clearly the biggest cheerleader for Bitcoin there is. So what are your thoughts?
Yeah, I completely agree with Legendary in terms of not reading too much into like the cover stuff. I think in crypto, we always love to find these linkages and causations for like top signals, but I don't think this is one of them. I think like what Michael Saylor has done with MicroStrategy is like a phenom. It's unbelievable. Like the way he is creating products for institutions, like being able to issue debt at like 0%, in a world where like private credit is increasing so massively is amazing, right? And why do people want that? Because the way he's structuring these things with the convertibility premium, like it's a great product, and institutions are smart, right? You can buy that, you can hedge it out. That's why these things fill so quickly. That's why it's just like unlimited cash. And now he's coming out right with this preferred equity as a new ticker, STRK. Again, like 3x the demand they expected. Goes back into that yield perspective, creating a dividend on these stocks. I think some people may forget like that MicroStrategy still has like free cash flows that they churn out from their underlying business. Now, as a proportion of their size, that's kind of gets smaller and smaller as this thing grows, but they do have the ability to support that. I would love to see other companies start to adopt this more aggressively, but it's super hard because Michael Saylor is in a unique perspective of having this company and basically having the controlling voting rights, whereas in a lot of companies, right, you have to get through so much red tape, so many votes, governance boards, all this stuff. So it's a slower process. How many of the companies behind the scenes are trying to do this? You're starting to see more pop up every day, right? Like even from other jurisdictions, whether it's Hong Kong or other areas. So I think he's really writing a playbook that institutions are starting to take note of because it's going well. And obviously, like Legendary said, if Bitcoin starts falling, what then happens, right? Well, it could get pretty hairy for a while, but luckily the way he's structuring it, right, it's debt. Now with the preferred equity, it can be converted. There's always like these convertibility options. So we'd have to see what happens there. But for institutions and the TradFi guys, they love these products. Like these products are great products. You can hedge them out. They get the upside. They protect the downside with these convertible bonds. So, I mean, it's fascinating to watch this play out. I think it's honestly something that will be talked about in business schools.
Interesting. David, I think, has just frozen there for a second. So hopefully he'll be back with us in just a little bit. Just testing. Brad, you look pretty still. Legendary, you look pretty... Okay. No,
dude, I'm here. Yeah, I'm here.
Cool.
Yeah. Which is a shame because I had some questions for him. There's some like him thinking that there's an avenue for more of this and are wanting to encourage that. I was curious if he was thinking strictly for Bitcoin or for just the ecosystem broadly, or like what he had in mind for that kind of structure. And then the systemic risk stuff. Like I don't know it as well as he seems to. So that would have been interesting to dig into.
Yeah. Well, fortunately, David's going to be with us every single week, and hopefully he'll be back with us when his connection fixes as well. So maybe we can circle back to that in just a little bit. But in the meantime, let's keep it moving, getting to the next headline, which is to do with the EU. It's to do with the EU. Obviously, this is the news that ECB president has rejected Bitcoin for Eurozone reserves while the Czech central bank does consider it. The TLDR here is something like this. The Lagarde, the chair, comments followed the ECB's latest 25 basis point interest rate cut on Thursday, marking its fifth rate reduction since it began easing monetary policy in June. And they said these were the specific words that they said, and kind of justifying why Bitcoin should not be on the table as an option. Said there is a view around the table of the governing council that reserves have to be liquid, secure, safe, and not plagued by the suspicion of money laundering or other criminal activities, Lagarde said, emphasizing the consensus among policymakers. She added,
bro, these guys are prudes. That's all I'll say. These guys are prudes. Like that's like a 2017 narrative.
I know, Brett. I know. We're stuck in a different century, not just stuck in 2017. I think it's a different century at this point. She added, and as a result, I'm confident that Bitcoin will not enter the reserves of any of the central banks of the General Council. Meanwhile, as we reported the other day, the Czech National Bank approved a proposal from one of the governors to assess diversifying some of its country's reserves into Bitcoin. And to be honest, that sounded very, very similar to the language coming out from David Sachs, the AI crypto czar from on stateside, where they've obviously set up this the executive order set up a working group, and they're tasked with kind of assessing the situation and figuring out what should be in the stockpile. So that's, there's got to be a formal process. It sounds like that's what the Czechs are going to be doing. But from the more general EU kind of combined perspective, it does not seem to be like that is what they want to do. Maybe coming to you, Legendary, straight away, you always have some, sometimes some damning criticisms of the EU position, although sometimes actually not so bad when it comes to the Mika stuff. At least they've maybe tried to give some clarity in certain aspects. What are your thoughts here on the EU's kind of determination to keep Bitcoin and other crypto out of the reserves?
Yeah, I got a pretty strong view on that. So there's two things. First of all, my favorite example whenever the ECB says something on Bitcoin is this article, which is called Bitcoin's Last Stand and dates November 30th, 2022. So 2 years ago, and says value of Bitcoin peaked at 69K. Since then, value has fluctuated around 20K. For Bitcoin proponents, the seeming stabilization signals a breather on the way to new heights. More likely, however, it is an artificially induced last gasp before the road to irrelevance. And this was already foreseeable before FTX went bust and sent the Bitcoin price well to $16,000. This is, I'm sharing the chart on screen. When the article came out, it literally marked the cycle bottom. Ever since, it has been up only for BTC. And then on a more serious note, the money laundering point is so absurd. There's an analysis by Chainalysis being basically the on-chain forensics company. And they said that $24 billion in crypto was laundered in 2022. And if you compare that to the global yearly money laundering volume, that is 0.47% of total money laundering that is happening in crypto, which makes a lot of sense because if you think about all those regulations and all the AML, anti-money laundering regulations that you have specifically also in the EU, when you off-ramp your crypto to fiat, your bank's going to ask you, where's the money coming from? Showing them that you filed your taxes is not going to be enough. They want to know, where have you purchased this? How have you purchased this? Is there any money laundering going on? Whereas if you want to do illicit stuff, it is very easy to give someone a bunch of cash and be like, do this and that for the 10,000 euro, $10,000 that they just gave you. So obviously it is a political game for the ECB. It is a very, very strong interest for them to be in charge of the money markets and to have them very much leaning in euro and to have them in the digital euro, the CBDC, which they're working on. So of course, they're going to bring any argument that they can bring against crypto, whether that's money laundering, whether that's the volatility, and not support it on any end, because this is the political mission and agenda that they're following.
Yeah, I think that's become quite clear. David, maybe coming to you here, we're talking about the EU's position. I guess you straddle the two universes quite well. You're, based on this side, but spending a lot of time in the States as well. How are you feeling about the different perspectives, especially because there's obviously been this significant shift on stateside? Where do you see the EU positioned in comparison with that? And then I think Brett had a couple of questions for you, given that we're still ultimately talking about Bitcoin. Go to Brett for some of those questions.
Yeah. So I was just making sure Dave was back with us. I saw him getting, he's battling the Wi-Fi monsters that I did whenever I was traveling. So I get it.
Okay.
If he can hear me. So for me, it was you had alluded to wanting to dig into, oh, Funky has his hands up too. So maybe that'd be good to go to him. But it was mostly just around, yeah, again, he dropped off. So I'll have to pivot, but the, just in general, like, this stuff is so archaic. It's hard to even really like sympathize with it anymore. It's just like this stuff will come inevitably. The stuff Legendary is talking about, like I'm interested in also not just the proportion of funds that are deemed as global laundering, but also like, okay, how much of that volume, 86 billion or whatever, is even relevant within our industry, right? We're having billions of dollars of volume a day nowadays in like Solana, right? So what is that over the course of a full year relative to what is deemed as laundering money? It was the same thing with Tornado Cash, right? Like Tornado Cash had 30% of it that was going to North Korea. Therefore, everyone is banned because it's bad. But then like people with brains looked at it and go like, well, that's a little like ridiculous. And they just overturned that stuff this last like week, right? So yeah, I think we'll just continue to see this trend over time. People overstep, then have to take it back, overstep, then have to take it back, and we'll eventually find equilibrium.
Yeah, I think that's probably fair. It's kind of how we spoke about this pendulum swinging. We're probably going to swing too far in the other direction based on some of the activity we've seen out of the gate with the internet capital market stuff in particular. But we hope we find like some reasonable middle position at some point. Fortunately, David might have just dropped off having some connection issues, but we've got our resident Bitcoin expert as well, Funky, with his hand raised. Funky, welcome to the stage, my friend. What are your thoughts here on the EU position, or any other thoughts with Bitcoin as it relates to either the EU or Saylor as well?
GM gang. Yeah, no, I just wanted to chime in as sort of the political correspondent. I think you guys covered a lot of the points. Brad just alluded to one of the ones I was going to make. I mean, Bitcoin is a true $1 trillion asset. It is something that has billions of dollars exchanges. So for the liquidity argument that Christine Lagarde is putting forward, that just seems preposterous to me. I think more importantly, this is, as you guys already noted, a political statement. It is clearly not something that is based on pragmatism. I don't know how you look at the apex predator of digital assets, see the changing tide, here in the United States, and not want to get on board this train. It's just, and we already know, you look at all the economic data, the EU is struggling big time, especially post-Brexit. So to not acknowledge that this is something that could actually help the EU zone is just mind-blowing to me. But I'm not that surprised, right? As some, and I don't ascribe to this notion as many Bitcoin maxis love to say, have fun staying poor. But I mean, that's really what it amounts to at this point, to not acknowledge that this is sea tide is changing, and to really be join the momentum. So I think it's really, really unfortunate and selfish for them to take that position. And then also, and I don't know if this is true, I saw this on the timeline yesterday, but apparently France did pass that taxing of Bitcoin unrealized gains. And I'm going to have to look into this, but it even went so far as to call it, quote unquote, unproductive wealth, which, on the heels of knowing that Bitcoin can be used as collateral, as an asset to get a mortgage for a house, and all these other things that we're going to continue to see these use cases emerge, especially with Bitcoin DeFi and these L2s. I don't know how they can take that position. It's really, really mind-numbing to me.
There's actually one other thing that I wanted to bring up based on Bitcoin. We're talking about volume. This is just like as an aside from the roundup. I actually saw a post yesterday that volume is so low on Bitcoin right now that the entire mempool was contained in 3 blocks. And there were ordinals that were getting processed that were from like a year ago, but the fee was so low that it just never went through. And now they're literally at the end of the transactions that they can fit into 3 blocks. And like, okay, we'll just these process. So ordinals hype is sufficiently depressed right now.
Fair enough. One follow-up question for you there, Brad. Thanks for your impassioned Bitcoin speech, Funky, as always. Did you see, as part of the roundup as well, Brad, there was the meme coin, the Bitcoin meme coin competitor on Bitcoin, like a pump fund competitor on Bitcoin. Did you see that?
Yeah, I mean, yeah, it's like that's always been the theory with ordinals. Like why I eventually psyoped myself into getting into it, because it was like I absolutely hate the way that it's constructed. I hate the tech behind it. It's all indexers off chain, which is like, even though on chain is the Bitcoin maxi thing, it's like, but I was like, you know what? They're going to replicate literally everything that exists throughout the ecosystem just on Bitcoin and just using this like toothpicks bubblegum setup that they have with like the indexers and shit. So is it a surprise to me? Absolutely not. Is it like going to be something that's going to be fun? I probably absolutely not. We've seen that everywhere else. Like it's too, like the speed is accelerating in the other direction way more than like the experience that Bitcoin can offer, because you can't fundamentally change like block times. You can't fundamentally change that it's not really that programmable. You can't fundamentally change that stuff without some very big upgrades. So like I'm just skeptical that that stuff is gonna see any lasting use.
Yeah, I think that is reasonable. That is a reasonable position to take. Since we're still talking about Bitcoin, David, I think you're back with us. Brad, you wanted to ask David a question. I think the audio is going to come through the spaces now. Potentially, as soon as I said that, he froze. Right?
1 2 1 2.
It should
See if
be.
you can hear him.
Hopefully, I'm back.
Okay,
He
yeah, I
is.
think we've got you.
Okay, nice. Sorry about
Okay,
that.
cool.
Gee, Miami Wi-Fi.
No, we get it. I struggled with this stuff while I was traveling. So, okay, just a quick one since we're running low on time anyways. You mentioned wanting to see other companies come in and do that convertible bond strategy that Michael Saylor was kind of, pioneering. What, like when you say that, do you have it in mind for other companies broadly just doing like a one-to-one imitation of that against just Bitcoin? Or you wanting broad assets across the space? Or like, what was your vision of these other companies stepping in?
Yeah, I mean, great question. I think we are going to see other assets being used by companies, whether that's Ethereum or Solana. How successful that is, and whether they're doing it just for the novelty of doing it and getting press around doing that. But I think you will 100% see this year companies doing a Michael Saylor strategy with Ethereum or Solana. How successful they'll be, how much demand they'll get, will be another question. It all
Have
depends.
you seen the on-chain variants of that for Ethereum that came out the last like week? There's like 3 different versions of it.
Of companies
It wasn't companies. Yeah, it wasn't companies, but there was 3 products that came forward with trying to create like a DeFi equivalent of doing the micro strategy, buy or issue. I think they were doing it specifically against like issue yield based on productive assets, and then use that to buy more Ethereum, put that to work, and then basically try to create that flywheel. But it's broadly structured the same way that that Saylor strategy is.
Oh, interesting. No, I haven't seen that. But I think, yeah, we're just going to see so much more experimentation. I think like it's going to end up, the majority is going to be Bitcoin, right? Because it just makes more sense. It's the biggest market capitalization, but we'll definitely see others. And one point I just wanted to make on the European Central Bank thing before I got cut off is I really wouldn't be taking advice from the financial advice from the European Central Bank, right? Like they lose money. If you're looking at institutions and banks for financial advice, look at the banks that make money like BlackRock, and they push Bitcoin hard. So I would just be careful when we're looking at people like that. Those guys are so behind the times. It's almost a bullish signal to me.
Very fair. Appreciate those insights as always. Look, we've got 10 minutes left for the show today. Let's hit the final headline. Brett, take it away.
Oh, we'll rip right into this one. Let me go down and find my section. Okay, so this one was 730 billion asset manager Apollo launches tokenized private credit fund. So just we'll go top down. The general pitch is, let's see, tokenized credit fund offers investors on-chain access to corporate direct lending and asset-backed lending, as well as performing dislocated and structured credit. As well as debuting on Solana. You mentioned earlier it's on Inc. It's on Ethereum, Aptos, Avalanche, Polygon. Some background on the actual nuances of it. So it's access via, it's called Apollo Diversified Credit Securitized Fund, ACRED, a CRED, I guess is how you'd refer to that. They have 1.2 billion in managed assets, and in 2024 they offered a return of like 11.7 relative to like U.S. Treasuries, which were 4.5%. So it's a little bit above what you would traditionally get with some of these more safe assets. The general pitch is that, and this is from the founder directly, was For those that are trying to build a diversified portfolio on chain, it serves as a high yielding complement to stablecoins, tokenized treasuries, and money market funds. So it's just seen as like another thing that you can put in a basket of safe funds. And then the interesting thing from the actual article was the sign off for me. And again, I'm just going to do this verbatim because it was interesting. So tokenizing Apollo products is just the beginning, quote unquote, Moy said. We're excited to collaborate with leading teams in the digital asset ecosystem to design modern treasury management, automatically rebalancing investment portfolios at scale, smart contract-driven collateral management, and in the future, potentially the enablement of secondary liquidity for alternative assets. So that was interesting to me because, like, one, this is like a semi-boring but like foundational thing that's important. But at the end, it's just like this train doesn't stop here, right? Like they're seeing this broad ecosystem and DeFi as like a thing that can be used to create a lot of interesting products on chain, and they're going to continue to push down that.
I like it. Excellent summary. Legendary, maybe coming to you first, then we'd love to hear David's thoughts on this. What are your thoughts here? You've been talking about maybe wanting to reallocate some capital, maybe not strictly in core crypto anymore as you kind of progress in your investing and capital allocating journey. What are you thinking with this kind of news?
First of all, sorry for not being able to unshare the article for whatever reason. Streamer is stuck on that. Maybe can you try to remove the screen sharing on my end? Look, I think it's super interesting, and it's great that we see more institutional adoption coming and seeing products like this tokenized private credit fund, and also the dislocated credit part of it, so which is basically focusing on mispriced debt that can exist due to market stress, lack of liquidity, other factors. That's a super interesting approach. Personally, if I want to move chips off the crypto table, then I don't want to have them invested in something crypto related. That has nothing to do with Apollo and the fund. It's also for a similar reason that if I'm going to buy stocks or increase my stock portfolio, I'm not going to buy Coinbase shares, because then again, it's a crypto, nothing against Coinbase and nothing against the coin stock, because funky, otherwise it's going to come for me. But I just want to have like different things that I invest in, whether that's an S&P 500, whether that's other equities that are not crypto related. But with that being said, super interesting to see a diversified credit fund that comes into our space and also comes on multiple chains as well, because it's a very specific product. It's not something that you just do to say, oh, I'm doing something with blockchain as well. This has more thought that went into it. At least this is how I read the article.
Yeah, very interesting stuff. Appreciate those thoughts. David, you mentioned at the top of the show that you had some thoughts here, maybe even some background on Securitize, whose name has kind of popped up over and over again. They've been, I think, doing some stuff with Athena, very much involved with BlackRock. What are your thoughts here on this private credit fund?
Just checking you can hear me still.
Oh, we got some echo suddenly. Where did the echo come from?
The echo.
Oh, I think it might be. Yeah, we're okay now. Nope, we're gone. Okay, not to worry. Any final thoughts here, Legendary? We've got. What do we think here?
I think
mentioning smart contracts is the thing that, like, it's DeFi. Like, so this has been my. Do you think this stuff gets square peg round hole into Bitcoin because Bitcoin exists and like they're trying to do some L2 stuff, or do you think these projects pushing into smart contract platforms like this has always been my long-term thought on this shit, is like the amount of utility that you can get from on-chain programmability and like what can come from that with like digital assets and all this shit. Like the addressable market for that is gargantuan. Now, like where value accrues in that ecosystem, because you're just diluted, right? On Bitcoin, you just have Bitcoin. You have ordinals, but like it's not as bought into. Whereas on Ethereum, on Solana, on L2s, you have 1,000, 100,000, millions, literally millions of tokens now being launched like this year. So it's hard to see where, or hard to predict, I should say, where value accrues in that paradigm. But it is unquestionably, for me, the thing that is going to have the broader and higher addressable market cap relative to Bitcoin. But again, like Bitcoin doesn't compete with anything, right? Bitcoin competes with itself, and then like its micro community within itself. But like because it's not programmable, because it's like not as verifiable, it's not as a direct of a competitor. So I don't know. It's that's just my broad view on this stuff, and like it's just good to see validation for that. I'm like, that's where these guys are going to go. They're going to pour all their money and effort and energy into things that they can control to varying degrees.
I like it. One of the final thoughts in terms of where this is going is one of their final comments, I think. So they said tokenizing Apollo's products, which is kind of what we've been speaking about at the moment, is just the beginning. They say, we're excited to collaborate with leading teams in the digital assets ecosystem to design modern treasury management, automatically rebalancing investment portfolios at scale, smart contract driven collateral management, and in the future, potentially the enablement of secondary liquidity for alternative assets. I think that is really, really cool. To some extent, I think that's already happening. And there are teams that are already establishing themselves as the place to go to, if you want to put some capital into their vault, they will take care of this kind of passive allocating strategy. For example, this has existed for a while on EtherFi, right? We spoke to the CEO of EtherFi, kind of explaining through their, I think it's their liquid product, that's what it's called, where you put your ETH in, and then that's just being allocated to a variety of places, and that's being rebalanced for you behind the scenes. And then even on some level, kind of tied to that, we're getting these AI agents who are being tasked with, taking a pool of USDC and just continuously rebalancing it and putting it into the pool, which is going to earn the most yield. So I think there's a fascinating opportunity here where, yes, these modern treasury management systems are starting to develop and actually are already there, but maybe, more TradFi capital will be able to access that. Maybe it's paired with AI in some way to really unlock, a lot more capital, bringing a lot more capital on chain. Legendary, any final reflections there as we close out the show?
Yeah, I think it's the yield aspect that is the one that really matters, right? David said at the start of the show as well. And ultimately, if you look at the stock market that averages at 7% a year, you look even at this fund that Apollo mentioned before, the diversified credit fund that did 11.7%, and then you look at, I don't know, our stablecoin yield, which is our quote unquote risk-free yield in crypto, and that can go as high as 16%, can even go higher with Ethena or with boosted yields. Or you look at the liquidity pools that we talked about yesterday, GLP for Jupiter, HLP for Hyperliquid, that is earning you an APY of 36% and gives you exposure to the majors as well. So I just think that if you, on the one hand, see a lot of the inefficiencies that we still have with DeFi because capital and liquidity is spread across so many chains. You see that with meme coins that are trading on both Solana and Base, for example. With virtuals, that was the case, and there was like a lot of arbitrage to be done there. You see that with loans that are inefficient sometimes. You see that with Gondi, for example, which is one of the platforms that we talked about on the show, where you can refinance loans and just make better offers for them on chain and just have a competitive loan structure. And if you observe that from the outset and then also gain the confidence that regulatory you can enter and venture into this space, then you really start comparing the TradFi yields that you're used to and seeing what this new space is considering as their risk-free yield. And I think this is a massive, demand and interest driver in Web3.
Yeah, that risk-free yield, I guess in Web3 it's just a different number. Like it's just significantly higher. Maybe it's the Aave number or something of that nature. Maybe it's the I'd say it probably is the Aave number, isn't it? So it's really, really interesting to see that develop. And as this capital kind of flows in, I suspect that number does get eaten into a little bit. But let's see how that goes. Guys, that is the show for us. We are at time. Thank you so much for joining us. As always, thank you to Legendary for co-hosting. As always, thank you to Bread for co-hosting as always. And thank you to David for joining us for the first time, but he'll be back with us, investment partner at Silvermine Capital. Fantastic to have his additional insights with us on the show and going forward as well. So thanks so much for joining us, guys. Reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. X, YouTube, Spotify, Apple, everywhere. Have a wonderful day. Take care. We'll see you on the other side on Monday. Have a great weekend. Bye-bye.